Hello folks, you're welcome back to this YouTube handle. This is the first time you're coming across this YouTube handle. I'd like you to click the subscription button. Don't forget to turn up your notification bell so you stay updated every time I post a video. Today I'm going to teach you a very important trading strategy that I believe is going to be instrumental to your trading journey. If you learn this concept very well, it's going to effectively improve your trading performance. Okay, so it's called the AMD pattern. I mean, for most of you who have trading experience, you must have come across this trading strategy, especially if you are trading the smart money concept. But again, a lot of you are using it the wrong way. A lot of you don't have clarity on how to approach the AMD pattern. So what is the AMD pattern? The AMD pattern is what we commonly call the accumulation, manipulation, and distribution concept. The A is representing accumulation of orders, accumulation of contracts that usually happens when the market is about to create the weekly market profile between the Monday, Tuesday, and Wednesday. In a bullish market profile, remember that we like to see price action create the low of the week between Monday and Tuesday. 75% is going to happen on Tuesday before price action starts to distribute in the direction of the order flow. So the accumulation of contract happens between the Sunday market open and until we start to see the manipulation to sell. So if we're having a bullish week, for example, what institutions will usually do is that price action would open, let's say on Sunday market open, then start to manipulate retail to induce them to take a sell. Meanwhile, the order flow is bullish, so they sell off during Monday and Tuesday just to achieve the low of the week at a significant institutional reference point, and then the market starts to distribute in the direction of the order flow. We start to see the market trade up higher and eventually come to close below the high of the week. So this is what the typical weekly candle looks like. Price action opens on Sunday. This is when the market opens and is accumulating contracts, then manipulates retail. That manipulation is inducement to take a sell while we're bullish. Then they distribute in the direction of the directional buyers and later come to close just below the high of the week. This is for a bullish weekly candle. Then in a week where we're bearish, you see the market open higher. Of course, if we're bearish, we have a higher opening and the market induces retail and manipulates them to take a buy. Meanwhile, they later come to distribute lower because we're in a bearish week and eventually close right above the low of the week. This is what a bearish week looks like. Okay, so the AMD pattern is seen in two places: in the weekly market profile or in our day-to-day trading using the Asian session model, because during the Asian session also we see price action accumulate contract during the Asian session, and during the London or the New York, we see institutions manipulate, induce retail and manipulate them in the opposite side of the market. So they take a sell while they really want to buy. So once they induce them to sell, they later distribute to the upside and close above. It also happens in your day trading, day-to-day trading using the Asian session. So we look to see price accumulate in Asian session. Then during the London or New York, we seek manipulation into a discount institutional reference point. If we're going to be buying, then distribute to the upside during the trading day and later close above. That also is called AMD pattern. So let me just give you a graphical sketch of what I mean. So before we proceed, I want to show you guys something very powerful, a trading performance from I think last week's trading. In the mentorship, I traded volatility indices. Like you all know, I also trade the volatility indices, and I just want to show you guys the trading performance using a small deposit of about $186, and just within 2 trading days between 15 and 16, look at the performance. We're able to do $1,136 profit just in 24 hours trading using one of my trading models, which is very powerful. You can see we made a profit of $1,139, withdrawal of $600, and I still had balance of $725. So I just did the recording so that I can show some of you. I know there are a lot of you who really want to do this trading stuff, but you're still doubting because you've been losing money all the way from when you started trading. You've been losing money and losing money and losing money. I had a sad story a few weeks ago from someone who reached out to me in January, wanted to sign up for my one-on-one mentorship, and I even gave him a discount to pay $500 to join me on one-on-one mentorship. The guy said he was going to get back to me, only for him to come back in February and tell me that he has lost over 15 million naira to trading. He's given his brokers 15 million naira to trading. That's about $10,000. So when he came back and he was crying and telling me, I'm like, why do people always want to go that route? Why do you wait until you burn your hands before you discover that the best investment in life is investment in knowledge? The best investment you can ever do is investment in learning, because when you learn, it stays with you. Nobody is going to take away what you know, because what you know sticks with you till you die. Okay, so please, I don't want any of you who are watching me on this YouTube handle to go that route. If you cannot afford mentorship, keep learning on the YouTube. That's how some of us started. You keep learning until you can afford to pay so you can get more. And those of you who can afford, don't wait until you burn your hands before you finally come into the consciousness that nothing is better than learning. Learning is the best investment you can give yourself. Those of you who are losing courage, you don't know whether trading pays or not. At least I've showed you just one performance today with $186. You can't say this is luck, because this is not just in one trade. This is in about 2 to 3 trades. And look at the confidence in executing this number of positions. It tells you that this guy isn't just trying to guess what he's doing. You can also be this good if you give yourself the opportunity to be this good. If we have our day trading, we see price action during the Asian session, consolidate, thereby accumulate contract. It doesn't have to be in Asian session, but it happens also in Asian session. Then in a week or in a day where we're bullish, institutions will induce retail to take a sell, thereby sweeping the lows of Asia and later creating a displacement to the upside, and will buy into the drawn liquidity above to create, to trade into the objective and later close right above. This is AMD pattern: accumulation, manipulation, and distribution into the objective for the day or for the week. Then again, we see price action do something like this: accumulate contracts and later induce retail to take a buy with fake breakout, taking out the buy side liquidity pool residing above the old highs or relative equal highs, then create a displacement lower. We sell when price returns into internal range into the objective drawn liquidity and later close for the day. Okay, so there are 2 important sessions you need to be taking note of: the Asian session for your day-to-day trading, and then during the London and New York, you're seeking for manipulation. You need to see that protractionary move that sends retail towards the opposite side of the market before we seek displacement in the direction of the real trend, in the direction of the real buyers. Okay, so let me show you just typical examples of price action creating similar patterns in day trading. Where we see price action literally create the manipulation leg. It doesn't have to happen every other day, but of course it happens quite a lot of times. Using the Asian session strategy. Again, you must understand that if you're using this in your day trading, the first thing to do is to identify an ideal Asian session. An ideal Asian session shouldn't be more than 40 pips. An ideal Asian session is between 20 to 40 pips and shouldn't be greater than 40 pips. In a day where you see that the entire Asian session range is even bigger than 40 pips, you shouldn't be looking for anything to trade. So like you see here, the Asian session is just 19 pips, which is very ideal for us to look for our pattern. And what do we see happen? We see price action create that manipulation leg. You see that manipulation to manipulate retail to take a sell during the London, manipulated them, and what they did was they traded into an institutional reference point right below. Price action just took out the sell side liquidity pool setting below all the relative equal lows here, the relative equal lows here, and also the institutional reference point right here. If you check the 5 minutes time frame, you're going to see there is another block right at this level, and this is the 15 minutes time frame. Price action created a displacement to the upside. A displacement is different from market structure shift. It doesn't have to be a market structure shift. All you need to see is there a displacement to the upside that creates a fair value gap on the internal range or another block in the internal range. Look at what price action did. Price action traded back into the bullish order block right there with a fair value gap. That will be the entry for the buy using the power of three concept. So this is accumulation, manipulation. During London session, we see the displacement to the upside and price return into the internal range, fair value gap right there. That's your entry, and the drawn liquidity is the relative equal highs right above there. Okay, price action would create these patterns at least 2 to 3 times every single week. It doesn't have to happen every single day on one currency pair, but if you check through multiple pairs, you'd see that it happens quite a lot of times. Okay, this is another time the Asian session, even though this is not a good example, but again, this is an ideal Asian session, and we're looking to see price create displacement. Price created a displacement, manipulated retail to take a sell, and created shifting market structure bullish. If you took the first buy here, you were very correct, except that this was a news event that happened and had to take everybody out, but still you traded to the upside. Okay, here's another ideal one. The reason I'm not even looking at this is because the Asian session is already quite too big. It's above what we're looking at. Remember, an ideal Asian session is 20 pips and shouldn't be more than 40 pips. Look at another example here. We have the Asian session, which is also ideal. If you measure the range of the Asian session between the low to the high, this is just 22 pips, so this is very good. Price took out the Asian session low during London session, the 2 a.m. New York Standard Time. We see price did a protractionary move, take out the lows of the Asian session, but we have another block right below, the bullish order block with a fair value gap right there. Price traded into that level right here and created a displacement to the upside. You can see the first displacement was this, leading to a change in market structure right there. Price traded back into that bullish order block, created another bullish order block, that is proportion candle. That will be the entry for the buy. If you didn't get to buy around here, you get to buy at the proportion candle right above. So this is your first entry at the bullish order block right there with a stop loss of about 15 to 20 pips, and you're looking for the next drawn liquidity, and of course it's going to be the relative equal highs right there. You see how price traded into that level using power of three concept, or the AMD pattern: accumulation, manipulation, and distribution. Okay, again we see another example. So this was a day, again price, the Asian session for me, it's too large, I'm not going to be doing anything here. However, price manipulated, but it didn't go anywhere. Okay, they didn't go anywhere. So let's see another one here. Asian session, look at what price did. Price induced retail to take a buy, broke the high of the Asia and all the relative equal highs right there. Took them out and created a displacement to the downside. You see that we created a displacement to the downside. Price returned into that bearish breaker right here with a fair value gap. This is also an entry signature if you use the swing high as confirmatory signature, the 3 candle price action, with the middle candle having the highest high. Price takes at the low of the third candle, that's a sell, and you're looking to sell into the next drawn liquidity right below. Okay, you're going to see quite a lot of examples. The most important thing is understanding the narrative also from the higher time frame. What is the narrative saying? What is the overall narrative from the higher time frame? You must understand where the institutions are looking to trade into on the higher time frames. Okay, so I'm going to be identifying also a typical weekly AMD pattern on the 1 hour time frame, because when you are looking for the weekly profile in the 1 hour time frame, you look to see price action. This is a typical example of what I'm talking about. Okay, price opened, this was on Friday. Price went into consolidation, created some level of consolidation right here or accumulation, and did a run on liquidity below that level of accumulation. You see that sweep to induce retail to keep selling, but what do you see immediately after that? A displacement happened. A displacement happened to the other side. That's how you know an AMD pattern is about to come in play. Immediately after the manipulation, we need to see a displacement come into the market. So a displacement happened, and during the Monday market open, price returned into that bullish order block with a fair value gap. This is a clear power of 3 concept, and we're targeting the next drawn liquidity, which is the relative equal highs right there. And if you took that buy from that level, that area right here, you took the buy, right there during the London session. You see that 3 a.m. New York Standard Time is London. Price delivered into the draw on liquidity. Okay, price delivered into the draw on liquidity. Here is another one. Power of 3 concept. Price accumulated contract. You see that level of consolidation that happened on Monday after the market opened. Price went into consolidation, and on Tuesday, price traded towards the opposite side of the market, inducing retail. Let's give it a sell, let's give it a buy. Retail traders are already buying. Price traded into that bearish order block right above there, and what do you see? Price created a displacement lower. Okay, price created a displacement lower, creating that fair value gap. And during the London session on that Wednesday, you must have gotten a sell from that fair value gap, and this is also a change in market structure. So if you got that sell at the earlier start of the week before this CPI news event that happened, you must have gotten some distribution to the downside, and you're targeting the relative equal lows. However, during I think it's the CPI news event, price took out the high there. Alright, so if your stop loss was still intact, you still would have delivered into draw liquidity, the objective right below the relative equal lows, the old low right there. Okay, so if you do a lot of hindsight study, you're going to see that there's quite a lot of these similar concepts that you can see happening again and again. Price took out the high, distributes. The AMD is about price action creating inducement to the opposite side of the market. This is an area where I see same happening. Price consolidated for a while, induced to retail to take a buy, but you are targeting the institutional reference point above that inducement. You see that fair value gap with the bearish order block right there. That is the target. Price traded into that level, and what do you see? Displacement to the other side. You have to wait for that displacement to happen for you to know it is an AMD. So displacement happened, traded back into the fair value, that is your sell, and look at the massive price delivery. Okay, the problem with this concept is it's going to require quite a huge level of patience for the setup to play out. But if you are that patient enough to let it play out, just then you're going to see it working every other time. Look for accumulation, look for an area where price is consolidating. Patiently wait to see price induce retail, manipulate them towards the opposite side of the coin. Then wait for a displacement. Wait for displacement to also happen. Okay, you have to wait for that displacement to happen before you can boldly say, this is it, you are in the right side, on the right side of the coin. Waiting for displacement is very powerful. I really hope that you learned something in today's session. I just wanted to show you guys this concept, which I believe is going to improve your trading. Don't forget to do the inside study. Go to the chat, identify these things on the 1 hour, on the 15 minutes time frame, create a journal. Make sure you train your eyes to see these things. If you don't do the work, we can't help you. You have to do the work. Even if you are in my mentorship program, if you don't do the work, it's not going to change anything. So you have to raise up, do the work, do the study, do the inside study, and I promise you, you're going to start seeing results like you've never imagined. Those of you looking to join me on one-on-one mentorship, just check the link on the description of this video and sign up for my mentorship program. The one-on-one mentorship is a dedicated program for traders who are looking to facilitate their trading progress. They want a close attention. You want me to monitor your performance. You want me to give you to hold you accountable for the trades that you take on your trading account. So it's beyond just showing you my profitable trading model and standard risk management protocol. I will also hold you accountable. I will hold you accountable for doing the things that you do on your trading account. So send a DM and my personal assistant will guide you through the enrollment process. Then those of you who've been asking for a broker to fund your account with, please check the link in the description of the video. I have a recommended broker for all of you. Register and make sure you fund your account, even if it's $100. Start trading. Join the Telegram community attached to the description of the video so you get access to free educational content, free signals also in the Telegram community from time to time. But make sure you are trading with the recommended broker that we recommend for you. And my friends, I think we've done so much for today. Until the next time, I wish you good luck. Good trading.